Bitcoin is a mania, and people shouldn't expect to make any money. So Bill Gates has been talking about Bitcoin, and he's not a fan. But with Bitcoin making headlines everywhere after such an impressive start to 2021, why is Bill Gates not a fan? And is he even betting on a Bitcoin crash? Listen up. As investors, it's important for us to listen to both sides of every argument, whether we agree with a person or not. That's why in this video, we're going to hear why Bill Gates doesn't think Bitcoin has a future. And then we're going to hear the counterbalance, the other argument to this, put forward by an institutional investor who explains why he thinks Bitcoin is headed higher. So if you're invested in Bitcoin or are thinking of investing, you need to hear this. Hi and welcome back. My name is Tom Heavey. I hope you're doing well. Let's get into it. But first, if you want to learn about cryptocurrency, from how to get started to finding the very best opportunities in the market, use the link in the description below with the coupon code HODL to get 50% off my in-depth program. Again, use the coupon code HODL and you'll get 50% off. Just quickly, I am not a financial advisor, nor is this financial advice. Okay, so let's get straight into it, and I won't make you wait. Let's just jump straight into this first clip with Bill Gates talking about Bitcoin all the way back in 2014.
The need to move money from place to place, the cost of doing so, the overhead, as you put it, makes me think, believe it or not, of Bitcoin, because some people have said, hey, Bitcoin is the answer to those problems. Are you a believer?
Well, Bitcoin is exciting because it shows how cheap it can be. Bitcoin is better than currency in that you don't have to be physically in the same place. And of course, for large transactions, currency can get pretty inconvenient. The customers we're talking about aren't trying to be anonymous. You know, they're willing to be known. So the Bitcoin technology is key, and you could add to it, or you could build a similar technology where there's enough attribution that people feel comfortable. This has nothing to do with terrorism or any type of money laundering.
So back in 2014, Gates remarkably said that Bitcoin is better than currency because it isn't physical. However, he did seem to prefer the underlying blockchain technology itself over Bitcoin, and even discusses using blockchain for a more traceable form of currency. Now this next clip is Bill Gates talking about Bitcoin again, but later in 2018.
Bill, Charlie and Warren have weighed in on Bitcoin. Do you own any?
Somebody gave me some for my birthday, and then a few years later I thought, hey, I'm going to sell that. So no, there's some really good technology in terms of sharing databases and verifying transactions that is talked about as blockchain. That is a good thing. Bitcoin and ICOs, I agree completely. It's one of the crazier speculative things where it's not, as an asset class, you're not producing anything. And so you shouldn't expect it to go up. It's kind of a pure greater fool theory type investment. So, you know, I agree. I would short it if there was an easy way to do it.
Again, Gates likes the underlying technology, but says he would short Bitcoin if he could, because Bitcoin doesn't produce anything, and so it is a pure greater fool theory type of investment. Now these next two clips are much more recent, with both being in 2021.
I also asked Gates where he lands on the topic we talk about virtually every day on this program, Bitcoin, and how he thinks about the cryptocurrency in the context of climate change, seeing as how Bitcoin takes enormous amounts of energy to digitally mine.
I don't own Bitcoin. I'm not short Bitcoin. So I've taken a neutral view. I do think, moving money into a more digital form and getting transaction costs down, that's something the Gates Foundation does in developing countries. But there we do it so that you can reverse the transactions, so you have total visibility of who's doing what, so it's not about tax avoidance or illegal activity. But Bitcoin can go up and down, just based on the mania or whatever the views are. And I don't have a way of predicting how that will progress.
Now that said, I'm curious for your thoughts here, because Tesla could potentially make more money from its Bitcoin investment this year than profits from electric cars in all of 2020. What's your take on that? What's your Bitcoin take, and the fact that the price can just go up or down based on a simple tweet from him?
Well, look, Elon has tons of money and he's very sophisticated. So, I don't worry that, his Bitcoin will sort of randomly go up or down. I do think people get bought into these manias who may not have as much money to spare. So I'm not bullish on Bitcoin. And, my general thought would be that, if you have less money than Elon, you should probably watch out.
So Gates doesn't claim to be anti-Bitcoin as such. He hasn't shorted it despite his comments in 2018, but nor does he own any. However, he does describe Bitcoin as a mania and warns us to watch out if we're thinking of investing into it. So, is he right or is he wrong? Well, first off, the mania. I've said it before and I'll say it again. If you want to understand Bitcoin's price, there are two things you have to know. First, Bitcoin has offered higher returns than any traditional asset class 10 of the 12 years of its existence. 10 out of 12 years. At the same time though, there have been 5 bubbles and therefore 5 major crashes in Bitcoin's history as well. One in 2010, another in 2011, 2 in 2013 and in 2017. So if you plan to buy Bitcoin as a short-term investment, it's likely that you will get caught up in a bubble in one of these mania phases. If you hold it long term though, the fact that it's outperformed other asset class 10 of 12 years, that's what begins to matter most. So loud and clear, Bitcoin is not a short-term investment. What's really interesting though is that institutions are beginning to enter the market. So in recent videos we've talked about Tesla, MicroStrategy, BlackRock, MassMutual and other huge names. Well, just recently, Fidelity's director of global macro, Jurian Timmer, penned a report on why investors might add Bitcoin to their portfolio. So this is really interesting. Let's take a look. Firstly, the supply of Bitcoin. As we know, Bitcoin's supply is capped at 21 million and is slowly trending to that number. With this, we can use the stock to flow model to predict the price. And the model's price predictions are eye-popping. The model successfully predicted the price of one Bitcoin to be at 24K this year, which was correct, and is predicting a whopping 463K by 2025. One can see why Bitcoiners are so excited. However, as Timmer notes, the stock to flow model is limited because it assumes the price is entirely a function of supply. As he says, where is the demand side of the equation? Think back to 2017 when Bitcoin first reached 20K, exactly in line with this model, only to collapse down to 3K before eventually coming back. What happened? Again, price lies at the intersection of demand and supply. And without the demand side kicking in, it doesn't really matter how scarce the supply is. So this is a criticism that I've often talked about too. The scarcity of Bitcoin is great and is a huge part of why it has value. But you can't just look at supply, you have to consider the demand too. So let's add demand into the equation as well. Fortunately for Bitcoin, an entire demand side dynamic is at work, one described by Metcalfe's law. Metcalfe's law holds that as the number of users grow linearly, a network's value, or in this case, Bitcoin's price, grows geometrically. In other words, Bitcoin's value should grow much faster than its network of buyers, sellers, and exchanges, etc. Timmer then shows us a comparison between how the number of Bitcoin users is growing and how the number of mobile phone users grew in the past decades. This chart on the right shows the two overlaid on a log chart, with the blue being for mobile phones and green for Bitcoin. And as we can see, Bitcoin's user growth is tracking what we saw with mobile phones very closely. And he notes that we see these growth charts everywhere, from mobile phone penetration rates to broadband subscriptions to internet usage. So Bitcoin's growth in usage has, over a 12-year window, been growing in the exact same way as other major technologies in the past. Now, because Bitcoin is fitting the typical pattern that we'd expect to see, that is a good indicator that growth should continue along that same path. And this creates a particularly bullish case for Bitcoin. Why? Well, because remember, price is at the intersection of supply and demand is growing exponentially. It's still early in the growth curve, while supply approaches its limit. Therefore, Bitcoin can act as a store of value because of its scarcity, but it's also an integral part of a technological revolution with potentially explosive demand growth. Let me say that again. Timmer notes how supply is limited and demand is growing exponentially. Now, if you want the price of something to rise, that is pretty much the perfect sentence. A limited supply and an exponential growth in demand. So clearly Timmer is bullish on Bitcoin. And I mean, this is the director of global macro at Fidelity, the fourth largest asset manager in the whole world. Now, I've been talking about why institutions will eventually adopt Bitcoin and cryptocurrency for the past 4 years. And some of you have been with me for the whole journey. We knew this type of thing would eventually come, but still we have to just take a moment and realize how crazy it is to be reading official reports from someone like this talking about how Bitcoin's limited supply and exponential demand could send the price higher. So what does this mean for investors? What does Timmer recommend? As he says, in my view, Bitcoin has gone mainstream, already considered a legitimate asset class by more and more investors. I think Bitcoin has a compelling supply dynamic and demand dynamic. At close to $900 billion, Bitcoin is still just a fraction of gold's total global value of roughly 11 trillion, not to mention the total global financial assets of 160 trillion. If Bitcoin is a legitimate store of value, is scarcer than gold, and comes complete with a potentially exponential demand dynamic, then is it now worth considering for inclusion in a portfolio? Despite the many risks such as volatility, competitors, and policy intervention, for some, the answer may well be yes. For those investors, the question of Bitcoin may no longer be whether, but how much. Now, an important point to note is that Timmer discusses how Bitcoin is not a replacement for stocks. Instead, he says that Bitcoin is a disruptor to the 40% of the portfolio, which is generally made up of bonds, commodities, real estate, and any investment outside of stocks. Bitcoin is an incredible investment for diversification, but it is not a replacement for stocks. So on the one hand, we have one of the world's smartest people in Bill Gates, and he's not a fan at all. On the other hand, we have one of the world's top investors who thinks Bitcoin looks great from both a supply and demand perspective. So I'm interested to know what you think. Who do you side with? Obviously, you know I'm bullish on Bitcoin. I've been talking about it for years, but let me know what you think in the comments below. Also, please just watch out for any scams in the comments. I'm trying to remove as many as I can, but I can't get to all of them, so please be careful. Thank you for watching. I will see you again very soon.